This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Market Wrap with Daryl Richburg.
Good afternoon, traders. I'm Daryl Richburg, and this is your market wrap for April 20th, 2007. Clear Channel Communications, the nation's largest operator of radio stations, said it agreed to sell its television group to a private equity firm for $1.2 billion. The sale was expected and comes 2 days after Clear Channel agreed to go private under a sweetened buyout bid of $19.35 billion from private equity firms Bain Capital Partners and Thomas H. Lee Partners, despite opposition from two large shareholders who say the price is too low. Foot Locker Inc. offered to pay $1.2 billion in cash for shoe, hat, and accessories retailer Genesco, which said it will evaluate the proposal with financial advisor Goldman Sachs and respond in due course. The $46 per share bid represents a 26% premium to Genesco's average share price during the one-year period prior to April 4th, when Foot Locker first sent a letter to Genesco expressing takeover interest. H&R Block said it served 3% more tax clients in the 5 months ended March 31st, boosted by a surge in computer-based tax preparations. The company said it had 16.4 million clients during the period. Digital clients who do business with the company online rose 14%, while office-based clients grew 0.4%. Also, H&R Block Inc. agreed to sell its money-losing subprime home loan unit to Cherevis Capital Management at a discount as defaults by the riskiest borrowers surge. In earnings news, Google reported a 69% increase in first quarter profit to surpass analyst projections by 38 cents per share. Google earned $1 billion, or $3.18 per share, during the first 3 months of the year. That compared with net income of $592.3 million, or $1.95 per share, in the same period last year. Caterpillar reported its first quarter profit fell 3%. Earnings per share increased, however, to $1.23 per share from $1.20, reflecting a reduction in shares outstanding of about 34 million, more due to buybacks. The results for the latest quarter included a gain of $46 million related to the sale of a security. Analysts forecast a profit of $1.09 per share. Xerox's profit jumped nearly 17% in the first quarter of the year to $233 million. Per share earnings were 24 cents, up from 20 cents in the first quarter of 2006. Analysts were predicting profit of 20 cents per share. Pfizer reported its profit fell 18% in the first quarter, hurt by one-time charges and disappointing sales of diabetes drug Exerbera. Net income grew to $3.9 billion, or 48 cents per share, from $4.11 billion, or 56 per share, a year ago. Analysts expected earnings per share, excluding charges and gains, of 57 cents on revenue of $11.77 billion. McDonald's Corporation reported its first quarter earnings climbs 22%, boosted by surging sales in Europe and strong demand for its new U.S. menu items. Profit for the first 3 months of the year was $762 million, or 62 cents per share, matching its April 13th estimate. That was up from $625 million, or 49 cents per share, in the same period a year ago. Scheduled economic reports for next week include consumer confidence, durable goods, existing home sales, new home sales, the Fed Beige Book, and gross domestic product. Until next time, this has been your Market Wrap with Daryl Richburg.